Hello everyone, welcome to my channel. My name is Orlando, and today we're going to be talking about the top 5 investor mistakes that I see. This is really big because this will give you kind of a shortcut so that you don't make these same exact mistakes. I see these mistakes happening all the time with friends, family, even clients. So let's jump right into it. The first mistake that I see investors making is they set unrealistic expectations. Now, what does that mean? What that means is, sometimes I'll speak to an individual and they're like, I invested $100 into the stock market and I can't wait to make my $1,000 a month. And you're just like, no, that's not going to happen. That is a rare, rare occasion where you will 10 times your money. That is one of those situations that most people will be really lucky to fall into, or it's something that you've researched your butt off and you knew it was going to happen. But to just think that you're just going to mosey along into investing into a stock or even investing in real estate or investing in anything and thinking that I'm going to make 10 times my money is just crazy. And a lot of people really think that. They think, I'm just going to start investing money into the stock market, or I'm going to start investing money into real estate, and I'm just going to see my money just skyrocket out of the sky. And I'm going to really start making a lot of money. And it does not work that way, guys. If you invest $100, then you should expect minimal returns or returns on that $100. So at the high end, it would be 10%. So you have to really be realistic when it comes to what you expect out of your investment. And this is one of those things that I see a lot of people making a mistake on. Number 2 is people not investing at all. You have individuals who literally will go, I don't want to lose it. I'm very scared. I don't want to invest. I believe in saving money all the time and not investing it. They just don't want to invest. And they're not investing because maybe they're scared. Maybe they want to do more research, paralysis by analysis. There are a ton of reasons why someone would not want to invest, but it is one of the mistakes investors make is just staying on the sidelines, looking, just sitting there the entire time, just looking and never joining in and investing yourself. It's very easy to be on the outside and to be like, you know what? I knew I shouldn't have invested in XYZ stock, or I knew I shouldn't have done the real estate. I would have lost money. But then on the other end, be like, you know what? I was going to do that, but if I would have done it, I would have been a millionaire by now, right? But see, that's where people make mistakes by sitting outside and just looking and never investing yourself. Even if it's a small portion, you need to start investing today. That is by far obviously one of the best ways to grow your money. And that's what my channel and when it comes to finances is about. You want to grow your money. There makes no sense for you to just let your money get ate away by inflation and all this other stuff. You want to grow your money. Money makes more money, right? This is another mistake that investors make, and I cringe when I hear people saying that they've basically been outside looking in for the last 3 years. And you think to yourself, you could have made a lot of money in those 3 years, but that's a mistake people make. Number 3, investing too much of your money. I have seen people and clients, even some friends, that will literally just take their whole savings and drop it into stocks or real estate. And it's one thing to see $100, $1,000 to go up and down in the stock market or go up and down in real estate or whatever your investment is. But it's another huge mental that you have to get past when you're investing $100,000, your whole life savings, 20 years worth of savings into something, and you watch it go drop down to you losing $20,000 in XYZ time. That is a big issue. It can scar you from investing in the future, especially if you're risk adverse and you're really scared of losing that much money, but you decided to invest this much money because you saw the upside. You saw, I could almost double my money In your mind, that's what you thought. And so you go ahead and you invest this huge lump sum of money, but you weren't really ready for it to begin with. You jumped into investing without doing your research or not taking baby steps, right? You want to crawl before you walk when it comes to investing. And that is very, very, very important, guys. I would never tell someone to drop their whole life savings into something before you do it in smaller increments. And like I said, guys, you just want to crawl before you walk. That is the saying for this segment. Crawl before you walk. Please. You will save yourself the headache of losing a lot of money and going through that investor learning curve. And number 4 goes hand in hand with number 3 is investing in things you don't even know about, that you have never done research on in your entire life. Why would you invest in the stock market if you have not done research on the stock market in general, how the stock market works, what companies you're investing in? Doesn't that sound foolish when I say it? But yet people do it all the time. Investing in Netflix, but I have no idea that Netflix, is a entertainment and streaming company. They don't follow their earnings. They don't follow their competitors. They don't follow any of that stuff. Investing in Ford and just thinking, oh, well, I don't know how much Ford made last year, but you know what? They're cheap and I think they're going to go up. That's not enough. That is where you're going to lose money at, guys. Investing in real estate, but don't know the market, don't know the area, deciding I'm going to drop, $30, $40, $50,000 on an apartment complex, but find out that it's in a really, really bad area. And you're probably going to lose that money. It never appreciates or anything like that. You have to know and you have to do the research on things that you're going to invest in. And a lot of beginners make this mistake, guys, where you have to do your research. So please, please, please do your research before you invest in anything. So let's talk about number 5. Number 5 is really important. And why is it important? It's because it applies to beginners and it can apply to people who are more advanced or quote unquote experts in this field. And it's not continuing to learn. You have to continue to learn new things that are happening in the market. If you think that you're going to learn something and then that will be the end of it and then you can just do that for the next 30 years, you're going to lose money. You hear what I said? You're going to lose money if you think you can learn something once and then not learn it or not add to it in the future. If you're going to stop learning, just don't even invest. You're going to literally be burning your money. You have to learn things every day, every time. You have to do your research. I'm telling you guys, if I knew what I know now and it was to give it to my younger self, it would be killer, man. But that's just not the way that the game goes. You're a beginner and then you gradually learn, and learn more. And that's just the way it goes. And if I would have stopped learning 10 years ago and thought that I knew everything, then I would definitely not be where I am today. So please don't make this mistake and try to learn as much as you possibly can. Learn from people that you trust. Learn. And then also, I want to add something on to that. Make sure that you also share what you've learned with others, as I'm doing now. So once again, guys, if you got enjoyment out of this video and I gave you some valuable content, please hit that subscribe button, notification, and like button. It really helps out my channel, and I will see you guys in the next one. Thanks.